Good morning, ladies and gentlemen. Welcome to my new video. I'm going to be focusing on economics today. So I've got a special report for you guys. And my channel was originally supposed to be about economics. PT stands for politics, tech and economics. And I wanted to basically talk about geopolitics and how it affects our everyday economics, everyday life, as well as technology as well. But I think I've been mainly focusing on geopolitics mainly because there's just way too much stuff going on in the world at the moment. So I'm going to be kind of talking about the economics today. Today's been a very, very big day in terms of oil prices. OPEC had a meeting today and they decided to reject United States' proposal to increase more production. So OPEC have decided against it, and in fact they've gone completely against what the US wanted. So because the US couldn't get OPEC to do anything, plus Russia had reduced their output as well a day or a couple of days ago. They cut their output by 500,000 barrels a day. And this was in response to the European oil price cap sanctions they placed upon Russia. So they didn't think about the fact that Russia are a major oil supplier. And if they reduce their output, that's just going to increase oil prices around the world, which means the Europeans will have to factor in and pay for more oil, which means their inflation is going to get higher. And it's just a lose-lose situation from them. So this dumb idea from Janet Yellen, which the Europeans decided it was a great idea, have implemented it and they've pretty much shot themselves in the foot. Which leads me on to this hilarious article I saw today. US to tap oil reserves to offset Russian production cut. So as you know, US has been releasing oil from its reserves. Its reserves were mainly for reserves for emergency purposes like war, or if there's a serious issue in the United States, say there is some sort of terrorist attack or some sort of natural disaster, or something major happens, if they get hit by an asteroid, for example. So this is for emergency uses only. So Biden has been releasing oil from the strategic reserve all throughout last year to help him with the elections. But now it did kind of help bring down the oil prices a bit, and however they're coming to a really, really low level now, and we don't know how much exactly is left in the reserves. Obviously we can guess, but you can see from this article the current stockpile is extremely low since 1983. And get this, they won't be able to replenish this, because if they want to replenish this, what this means is they're going to bring up the oil prices even more, because when you want to replenish your reserves, this means you are bringing up the demand. So you basically want more oil, and so you want to take out more oil from the market to fill up your reserves, which means it will increase the oil prices around the world. So they are leaving themselves in a really sticky situation here. They will not be able to fill up their reserves. And what you might find that the oil that they filled up the reserves over the past few years when oil was cheap, now if they have to fill up the reserves, they're going to have to pay over $80 per barrel. So it doesn't make sense to get rid of the oil reserves right now. It's just really bad economic sense. So it's almost laughable that Biden decided to do this again. And I look at the oil markets almost daily, and it really hasn't made much impact to the oil market. And as you can see here, So this is the monthly chart for the oil prices. And as you can see, the big drop that you see here was because of the Chinese New Year. And this lasted for around 2 weeks, or just over 2 weeks. And at the end of the 2 weeks, there was the Lantern Festival, which goes on for around 4 days. Could be 5 as well. And so this explains the big drop in oil prices, because the demand from China was very, very low. So Monday started picking up again. Then there was some sort of report saying that there was less demand in the oil market, and there was a lot of oil in the oil market as well. So the oil prices shot down for a bit. Then Russia decided to cut its production by 500,000 barrels per day, and then the oil prices shot up again. And today we see the result that Biden has decided to release more oil from its reserve. So you can see it's gone down a little bit, but it has gone down a little bit, but it's not going to make too much difference. Don't forget the Chinese market, or the Chinese industry, is still yet to pick up steam. They only just come back from holiday, and they've also been in severe lockdowns for months and months. So it's going to take a while for the Chinese industry to get back into full speed, and once it does, the oil demand is going to really skyrocket. And you can see 6 months ago, when oil prices were up to like $120 a barrel, this was when Chinese industry was running at full speed. Then it started going down because China was in severe lockdown. As you know, Shanghai was locked down, Chongqing was in lockdown, all major cities were in lockdown at some point, even Hong Kong was in lockdown. So demand started going down month by month. So I can imagine oil prices going back up to $120, which is going to be a big headache for Biden, because people at the pump will have to pay more for their gas prices, and he's going to get a huge amount of grief and headache from the Americans. Inflation is already still high, and there was a report which came out today saying that the inflation is still high, which means the Fed is going to still carry on increasing its interest rates. And so there's a lot more headaches yet to come for not just the US economy, but the world economy. So this report came out today. OPEC had a meeting today, and you can see OPEC output drops as Saudi production falls by 156,000 barrels per day. Crude oil production from all 13 OPEC members slid by 49,000 barrels per day in January from December, as top producer Saudi Arabia slashed output by 156,000 barrels per day. OPEC's latest monthly output market report showed on Tuesday, which is today. And they're also expecting that the demand is going to be growing as well from China and other emerging markets like Asia, Africa, Middle East as well. So they're looking at real huge changes happening over the next few months, and this is going to bring up the oil prices much higher than what it is right now. And the US and OPEC obviously still trading insults with each other. They're calling the OPEC a bunch of cartels. US have asked OPEC a number of times to increase productions, and Saudi Arabia and especially Russia are saying no. This has forced United States to release their own strategic reserves, which they didn't want to, but gone are the days when they could really boss Saudi Arabia and OPEC around. Times are different now where they cannot boss these countries around anymore. So more oil releases from the US Strategic Petroleum Reserve won't really rock the boat, says UAE's energy minister. And as you can see from the chart I showed you, it really has not made much difference to the oil prices. And in fact, by tomorrow, oil prices will probably go back to normal again. It's only going to make maybe not even a 1% difference, to be honest. And everybody knows that the US Strategic Reserve is very low at the moment. So you cannot really compare that to the demand of the Chinese economy and the emerging markets, that is not going to be enough to kind of fill up the demands. So Saudi Arabia and Biden, as you know, they do not get on very well. Biden specifically said that he's going to make Saudi Arabia into pariah, and him and MBS do not get along at all. Biden even promised or even threatened there will be reckoning with Saudi Arabia, and still to this day he hasn't really put any action on Saudi Arabia because he can't. His hands are tied. His hands are tied because any action against Saudi Arabia, and Saudi Arabia will immediately, and I'm saying immediately, stop using the petrodollar, and they will immediately start using other currencies like the yuan and different currencies as well around the world. And the United States US petrodollar would be in serious jeopardy if Saudi Arabia does that. I mean, as of today, Saudi Arabia has kind of agreed with China and other countries. They will kind of use different currencies, especially once they join BRICS. But right now, as it is, they are still using US dollars. Nothing really has been signed in a dotted paper. Nothing's really been agreed. So this is why United States hasn't really taken action against Saudi Arabia. And plus, the United States is too busy with all of the stuff going on around the world. The United States is far too preoccupied with Ukraine, far too preoccupied with China, far too preoccupied with weather balloons. They have not got any capacity to go after Saudi Arabia as well, and also they're far too busy with Iran as well. United States is basically it's just juggling too many balls at the moment, and when you juggle too many balls, all the balls will eventually end up on the floor and you'll end up with none. US has got other headaches as well, not just oil. They have a big headache going on with petrodollar and also the yuan, the rising power of China, as well as gold as well. So as you know, China has over 3 trillion worth of US treasuries at the moment, probably more. And what China has been doing lately, they have been dumping a lot of treasuries, they've been dumping a lot of debt. And you can see from the US Treasury's report, they have already dumped over 900 billion over the past few months, which is a lot, and they are dumping more and more every single month. And what they're doing instead, they are buying gold, and they have announced all of these gold buying. They are buying from all over the world. They're using these US dollars to buy gold, and already China is the biggest producer of gold as well in the world, so this makes them the largest owner of gold right now. Another country which is buying a lot of gold is Russia, and the third largest country buying gold is also India as well. And India has recently announced huge stockpiles of gold they are buying, and as well as silver. And not many people know this, but India has very, very thousands years of history of buying gold. And this is part of their tradition, basically. And in the Asian culture, especially when two people get married, it's custom for the male groom to buy the bride some gold. So I don't know how many of you have been to an Indian wedding, but when you go to an Indian wedding, you will see the bride basically covered with gold. And the richer the family is, the more gold they will buy for the bride. And gold is seen as an investment for a lot of Indians and Asians. So this is what they do. They buy a lot of gold and they invest it, and they buy each other gold for their weddings. They also buy silver as well if they can't afford gold. So this is why India is also buying a lot of silver. So every year there's more and more demand for gold. Gold is getting more and more expensive every year. Gold prices have been going up, shooting up, past 20-30 years, and they will continue to go up. So it's still a very, very safe form of currency. It's basically, if you really want to be wealthy, it really doesn't matter how many dollars you hold, but it's actually, if you really want to show off your wealth, it's about assets, it's about commodities, and also how much gold you have as well, and also based on silver. Because basically one of these days, fiat currencies, and what I mean by fiat currencies, I mean dollars, pounds, anything like that. The problem with inflation, there's going to come a time when these fiat currencies are not worth their weight in paper. They're going to be like, you can just burn this money away. For example, like in Zimbabwe, they've had huge inflation problems, hyperinflation, and a slice of bread would cost a billion or a zillion or a trillion Zimbabwean dollars. And this is what happens when your currency gets devalued, when the government devalues your currency and your papers really isn't worth anything. So this is why you have to stay away from fiat currencies and try and put some value and buy some gold and assets, commodities, things that the government can't really take away from your hands. That is real wealth. Also assets and properties as well, things like that, things that you can actually physically hold and what the government cannot control or take away from you. So this is why China is now buying huge amounts of gold from all over the world. They're dumping US treasuries and they're buying gold instead. Other countries are doing it as well. Like I said, Russia's doing it, India's doing it, Turkey's doing it, and many other countries. The BRICS nations are doing it, and this is not coincidence, guys. And you will realize all of the BRICS countries are all buying gold, and all the countries that want to join the BRICS, they're also buying gold as well. Countries like Turkey, Algeria, and many other, South Africa, even many other, countries that want to join the BRICS, they're all buying physical gold because they are definitely planning something. And I wouldn't be surprised if one of these days all of the BRICS members announce that, we're gonna create this new reserve currency. It's gonna be based on gold, rare earths, platinum, gold, silver, and it's gonna be based on that. And I wouldn't be surprised if they announce that, suddenly over the next year or so. But we will see. Talking about this article, you can see here, China is selling off United States Treasury securities and replacing its holdings with more gold. The communist nation, this is coming from USA Today, guys, so, apologies for the language they use. As the communist nation continues its diversity of foreign reserves away from American-held goods, China sold off around 310 billion worth of US treasuries since 2018. It's actually more than that because I was checking the Treasury's report. Just in the last few months alone, they have dumped over 700 billion, which dwarfs this number, by the way. So these guys obviously haven't done their research. So anyway, let's move on. Britain is obviously having a lot of issues as well. You can see Brexit has cost UK economy over 35 billion. Business investments has reportedly been wiped out since the country's withdrawal from the EU. But I would probably estimate more than that. I would probably estimate 300, 400 billion. And this 300, 400 billion is basically, costs that you cannot put money on. For example, because of Brexit, a lot of businesses will not invest in UK. So you see a lot of businesses leave the UK. A lot of businesses will not invest in UK. Like the other day, AstraZeneca decided to open up its new factory in Ireland rather than UK. And the Chancellor said he was very disappointed. Mini is moving out of UK. Many car brands are moving out of UK. Car production is stopping. Banks are moving out of UK. So they're not putting a cost on all of that stuff, which means, if businesses are moving out of UK or if businesses are not trading with Europe, the government will get less tax from them, which means they make less money. if investment does not go into UK again, they're not going to get as much money. UK is not going to get much money in terms of investments, and which means less and less companies are going to invest in UK, because it becomes like a snowball effect. Once everybody knows the British economy is not a good place to do any business, everybody will stay away, and all the big businesses will stay away, because at the end of the day, businesses want to make money, and you're not going to go to a country where you know is doing very badly economically. This is why we're talking about cost of 200-300 billion. I mean, even now you can see strikes happening almost every day. Britain is absolutely in a really bad situation, and the recent report in the IMF said that Britain, out of all the top developed economies, Britain is the only one that's going to be doing the worst out of all the rich countries. And even Russia, the most sanctioned country on earth ever in the history of the earth, is still going to do better than UK, which actually says a lot. So this is quite a funny story, really. BBC offices raided in India. So recently BBC produced a documentary, and they did not say some good things about their leader Modi. They actually said some controversial things about Modi, and they didn't really say any nice things. So because of that, Indians were very unhappy with the BBC. So in return, they decided to raid the BBC offices. They arrested a few people, and it's quite hilarious. And this isn't really reported much on the BBC website, because it's quite an embarrassment for them. If this happened in China, you would see front page news everywhere. Every single paper will jump on it saying, oh, look at BBC, look at John Sudworth, look at how they're being treated. But because, India is seen as an ally, they're not going to say anything bad about it. They're going to be like, oh, okay, that's fine. You can raid us. You can do whatever you want to us. Don't worry. We deserve it. And it's just funny, the kind of double standards going on here. But like I said, when BBC produced some lies about China once a few years ago, about Xinjiang and stuff like that, and John Sudworth got chased out of China. He didn't get chased out, but he basically run off to Taiwan like a coward. Every single British paper was picking up on it and saying, oh, look at this authoritarian regime, look what they're doing to free press. But when this happens in India, when BBC offices get raided in India, no paper wants to pick it up here. It seems like there's a lot of kryptonite stories happening in the West where they are not allowed to touch certain stories. And I'm talking about, the Nord Stream 2 story, which should have been picked up by every single Western paper and press. That should have been front page news, but again, nobody would pick it up because it's like kryptonite. If they produce any report on it, then they know their head's going to be on the chopping block, so they try and stay away from things like that. So again, this is one of those stories you find in RT, but you're not going to find anywhere else. So Saudi Arabia is the missing piece in the BRICS. And every single day there seem to be new members joining. And this is a report basically on how Saudi Arabia is the missing jigsaw in BRICS. When Saudi Arabia join, they will be the key in producing this new BRICS reserve currency, and this will be the game changer when it does, because this will replace the US reserve currency. Because the US reserve currency, US has been using the dollar as a weapon. They have been placing sanctions after sanctions to countries they do not like. They've been using it as a weapon to kind of threaten countries, even they threaten their allies even. And they have been taking things too far lately, and this is why, the global south and all the countries, they basically had enough of the dollar and had enough of United States bullying and also the arrogance. And now I think they're going to be starting with the new BRICS reserve currency, and this is going to be happening very, very soon. They have realized that you cannot depend on the United States, because one of these days, if the United States do not like you, they will sanction you. They will take away all of your reserves from the central bank. So basically, you are at their mercy if you kind of depend on the dollar. So a lot of countries now will want to kind of step away from the dollar, and this is fast accelerating because they've seen what the United States and the West has done to Russia, in Iran, to Venezuela, and they know one day they could be next. So a lot of these countries are fast tracking this, and I believe this reserve currency could be fast coming out this year, if not next year, but definitely over the next few years. So these are a list of countries who are looking to join the BRICS. And you can see Afghanistan. The reason Afghanistan wants to be joining the BRICS, because Afghanistan is actually, one of the, it's a treasure trove of rare earth minerals and copper and gold and many other untapped resources in Afghanistan. And the only reason nobody's really tapped into Afghanistan's resources because of the safety issue, because of the terrorist elements, and because if you send your workers to Afghanistan, there's no knowing if they might get attacked by terrorist groups and stuff. So it's very, very difficult to kind of get these resources from Afghanistan. But once Afghanistan is a lot more stable, they have a more of a stable government, there's more law and order and stuff, then I think Afghanistan will be moving up in terms of the economy very, very fast, because they have over $300 billion worth of natural resources which they can harvest and sell around the world. And this is why Afghanistan is very, very important, and it's also the central hub where Afghanistan, if you look at the map, Afghanistan is right in the central of Asia, and it basically becomes like a transport hub for Afghanistan. Like Russia has to go through Afghanistan to get to India, Pakistan. China has to get through Afghanistan to get to Europe, and vice versa. So Afghanistan is a very, very important hub, and this is why they want Afghanistan to join the BRICS. So you got Algeria. Not many people realize that Algeria has got huge amounts of gas reserves and also oil as well. Algeria is a member of OPEC. And again, Algeria is a very, very important OPEC member, and there could be. And if you'd realize, all the BRICS members, they all have something to offer in terms of natural resources. Every single country, like whether it's Russia, whether it's India, whether it's South Africa, every single country has some sort of natural resources to give. And this is why all the countries that are picked in BRICS, they either have lots of natural resources like oil, gas, rare earth minerals, because that's where the currency is going to be based on, and this is very important why these countries are joining the BRICS. So you've got Argentina as well. Argentina is also a very, very rich country with lots of agricultural. They've also got a lot of gas as well, and they have also a lot of natural resources as well. And Argentina is a dark horse. They can be they used to be one of the richest countries in South America, but they've had decades of war and corruption, which kind of has destroyed the country a bit. But it looks like they are getting things back to normal. So as you know, Egypt has got huge tons of natural minerals and raw materials, chemical products. Indonesia has got huge amounts of natural resources as well. They've also got a huge population. Their population growth is 276 million, which is a lot, for Indonesia, and they are definitely one of those up and coming countries. Iran has also got huge amounts of gas and oil as well, huge amounts of untapped natural resources, huge size, and geologically they are at a very good point in the world as well. So a lot of transport can go to and from Iran and via Iran as well. So Iran is a very good spot as well. Kazakhstan produces mainly uranium for nuclear power, so it's a very important country there. Nicaragua, obviously, the reason Nicaragua is there because they are building a new Nicaragua canal, and once they build this new Nicaragua canal, countries around the world would not have to depend on the Panama Canal. Panama Canal is mainly controlled by the US government, so they basically have says in who goes through, who doesn't, and things like that. So Nicaragua Canal will be a very, very important hub for the rest of the world to go through, and including China as well. So this is why Nicaragua is in there. They also have a lot of natural resources as well, and this is one of the reasons they are there. Saudi Arabia, as you know, huge amounts of oil, gas as well, other natural resources. Senegal, again, they've got huge amounts of resources. Thailand even, United Arab Emirates. And the list goes on, guys. You can see they're very, very powerful countries. They each of them have got something unique to offer to the BRICS collective group, and it's a really exciting time to see this organization develop. So you can see this article here, goodbye petrodollar, Russia and China dump US treasuries, buy gold. And Russia and China have recently announced huge amounts of gold in their kind of central banks. They have it's kind of surprised the world how much gold they have been buying over the last few months, and this has accelerated over the past few months, mainly down to what's happening with the sanctions. And a lot of these countries are now realizing, you know what, it's time to dump the US dollar because of what US has done to Russia in terms of sanctions. It's time to dump the dollar and forge your own path and have your own sovereignty. You truly do not have your own sovereignty if you only rely on the US dollar. So you can see what's affecting oil prices this week. But I found this article quite useful because what Saudi Arabia and OPEC are saying that they expect oil demand in 2023 to be very, very high compared to 2022, even higher than 2022. And the reason is Africa's demand will increase by 0.17 million barrels per day. Asia, which includes China, will be 1.81 million barrels per day. And China's alone is going to be 0.75. Rest of it is going to be covered by ASEAN and Japan and stuff like that. Russia will decrease by 0.14. Europe will decrease by 0.07, which is not a big number. Latin America will increase by 0.14. Middle East will increase by 0.15. North America will increase by 0.06. So all in all, there's going to be more demand for oil this year, especially China opening up as well. And the rise of ASEAN countries, likes of Indonesia, Vietnam, Japan, even Laos, Cambodia, Philippines, Singapore, all of these countries who have actually increased their GDP over the past couple of years, and they are kind of getting more and more richer, and even Malaysia as well. So all of these Asian countries are basically trading with each other, trading with China as well, and they're making huge amounts of money, and this will grow their demand for oil over this year. And this means that oil prices are probably going to go higher. I estimate oil prices to go to $150 a barrel. At the moment they're around $75 to $80 a barrel. And this will probably double in the next few months. It all depends on China, how fast they can get the economy back on track. And once they do that, then they will things will move on very fast. Even Goldman Sachs is saying there's going to be a huge oil supply shortage. There's not going to be enough oil in the world for all of the industries in the world. and so there's going to be a huge problem, which means oil prices are definitely going to be doubling or even head up even more. This is bad news for the rest of the world, which means inflation is going to be going up, not just in the Western world but also in the developing world as well, because the developing world also have to buy oil with the US dollars. And the problem with US dollars is at the moment the US dollar is very, very strong, so which means it's more expensive for you to buy oil, because as the US dollar gets stronger, your currency gets weaker as a result. For example, if you have the Indian rupee, compare it to the US dollar. The US dollar is far stronger than the rupee. So if you want to buy oil, you have to convert your rupee to dollars, which means you're going to have to pay more, because the US dollar is far more stronger than the rupee, and which means if you buy oil with dollars, you lose out, because the dollar is getting stronger and stronger every single day. So this is the problem really with the stronger dollar. Everything else gets more expensive. Oil and other commodities get expensive, which means inflation will start going up and cost of goods start going up, which is really, really bad news. So today a report came out. Basically, inflation has dropped. It's never any good news, to be honest. This means that the Federal Reserve will have to keep on increasing interest rates. They've increased interest rates by 0.25 like a few weeks ago. And this caused huge ripples in the industry. And then like a week later as well, there was a job report came out in the United States saying the job market is looking very strong. However, it's basically a fake report, because what it doesn't tell you is it's only showing payroll reports. So you can have someone working for 2 or 3 jobs, because inflation is so high. People end up getting 2 or 3 jobs just to make ends meet, and this is why the job reports look so high, because they look at the payroll data rather than unemployment data. So this is why it's a fake report, because if you speak to people in the United States, that on the ground things are really, really tough. Inflation's really high. People are living paycheck to paycheck. This is why people end up forcing themselves to get 2 or 3 jobs. If you're a man and a husband and wife, you're both working 2 jobs each, just to make ends meet. So things are really, really difficult in the West, and that job reports doesn't really show what's really happening on the ground. So the Fed has said that they're going to carry on increasing the interest rates as long as it takes, and this is going to blow up the economy, because already the US economy is almost 32 trillion in debt, and if you increase the interest rates, that means you're going to have to pay more interest on your loans and borrowings and debt, and this is why the economy is just gonna crash sooner or later, because the Fed thinks they can control the inflation, but they don't really understand what's causing the inflation. The inflation is being caused by high oil prices, gas prices, supply chain issues around the world as well. So there's a lot of things that's out of control of the Fed. Obviously they have contributed to it by printing loads of money, so it is obviously their fault because of that, but they cannot control gas prices, oil prices. They cannot control geopolitics. They cannot control the supply chain problems. They cannot solve trade war issues that's going on between the United States and China. There's a lot of stuff going on that they don't understand, and by increasing interest rates, and they think they can curb inflation, it's just never going to work. It's just not going to work, and they really don't know what they're doing, to be honest. And who would believe these Fed guys know what they're doing, especially a year ago when you had Mr. Powell coming out and saying, inflation is only transitory, nothing to worry about, it will go away. Has it gone away? No, it's gone even worse. So you can't believe a word these guys are saying. You can't trust what these guys are doing. They're just making things even worse. and this is just going to crash the economy, and I just think it's going to happen this year. They're going to really have a severe depression sometime this year if things carry on, if they keep increasing the interest rates. Anyway, let me know what you guys think, and I'll see you guys in the next video. Thanks for listening, and I'll see you soon. Bye bye.